Friends, welcome to the BFM crash course. This is our unit number 8. In the next 15 to 20 minutes, you will be able to revise all the important contents from the unit number 8, and I will explain everything in just using the flow chart as well as the mind map. So this will help you revise. The chapter name is roles of EXIM Bank, Reserve Bank of India, Exchange Control in India, FEMA and FIDI. So friends, if you are looking for those content which you should study, right, for so that you can score good marks in BFM, then this crash course is for you. This covers only those things from where questions are repeatedly being asked. We are not covering the 100% syllabus, rather we are focusing more on those topics from where questions are most frequently asked. So now let's get started with the EXIM Bank. Right, the first topic is EXIM Bank Financial Support Framework. As you can see, now friends, ever wondered how Indian exporter and investor get the financial strength to go global? Let's unlock the powerful support system behind it, that is called EXIM Bank Financial Support framework. So first of all, we have corporate banking solution, right? So this is the backbone for export unit, from research and development, finance to pre and post shipment credit, right? EXIM Bank ensure exporter have a smooth cash flow throughout their trade cycle. It also offer import finance, it also offer equipment loan and even SPV financing for SME cluster. Whether it is creative economy lending or support for grassroots enterprise, this pillar ensure every kind of exporter find a helping hand. So that is called corporate banking solution. So main point, R&D finance, pre and post shipment credit, import finance, equipment loan, SPV financing, creative economic lending, grassroots enterprise. These are the main points. Now friends, lines of credit. Next we have the lines of credit, right, which is a kind of game changer for exporter. The line of credit is a kind of game changer for exporter. This support eliminate payment risk and help them break into new market. So EXIM Bank extend credit not just to Indian exporter but also to overseas institution, sovereign government and regional development bank, RDB. Yes, they extend their credit to these institutions also. So it even back import of goods, project and services under deferred payment terms. So under deferred payment terms, they back all these things. So whether it is government bank or independent, EXIM Bank LOCs, that is called lines of credit, right, is a smart tool for global trade expansion. Then we have overseas investment finance. See, this one empowers the Indian company to invest abroad. It gives them access to new resource, new market and even strategic assets. See the word strategic asset, please highlight it. This is not just about growth, it's about making India globally competitive. Right, so by enhancing export opportunities and boosting operational efficiency, this financial solution truly drives the economic growth. That you can see overseas investment finance. So that is a quick look at the EXIM Bank stand strong behind India's global trade. So whether you are obviously you can just see this particular slide, corporate business solution, lines of credit. So last time lines of credit question was asked. So for key points you must keep in mind that it extend to the overseas institution, sovereign government, right, regional development banks. It even back import of goods, project and services under deferred payment system, right? So this support, this is the game changer for exporter. It eliminates the payment risk and help them break into new market. This is one of the major breakthrough in the field of export financing. Now friends, let's look at the EXIM Bank services and program. In just one pick you will be able to revise the entire content. Let's get started. So friends, EXIM Bank is not just all about finance. It is a one-stop powerhouse for exporter, investor, businesses ready to go global. Let's explore the diverse services and program that make EXIM Bank a pillar of international trade. Right. So let's explore the diverse services and program. The first we have is called Export Marketing Fund, EMF. Here you can see on the right hand side. Export Marketing Fund. So where EXIM Bank acts like a nodal agency. In the Export Marketing Fund, EXIM Bank acts like a nodal agency, right, obviously designated by the Government of India. So EXIM Bank acts like a nodal agency designated by the Government of India. So how it support Indian company venturing into developing market? Let's see. First of all, we have EMF1. What is EMF1? US dollar 250, basically a 250 million dollar World Bank loan for promoting engineering product export. So remember, this is called EMF1, right? $250 million World Bank loan for industrial project. Then we have EMF2, another $37 million for broader export development. Then we have EMF3, entirely funded by the EXIM Bank on resources. Eligible private and joint sector firm with a strong export strategy for developed nation. The focus is on manufactured goods and software product. That is their main focus here, right? So EMF1, EMF2, EMF3. EMF1 is about promoting engineering products. EMF2 is about broader export development. EMF3 is about EXIM Bank on resources, funded by EXIM Bank on resources. If you look at the eligibility, so here I just told you that private and joint sector firm with a strong export strategy for developed nation, right? And what is the focus? The focus is manufactured goods and software export. That is the main focus here. Now let's look at the consultancy and technology service on the left hand side. So what is the consultancy and technology service? So if you need expert help, EXIM Bank offer consultancy and technology service to guide business at every step, from manpower, expert recruitment to project report, planning, even technology transfer. It is full spectrum support for growth, right? Then the third thing we have is called international merchant banking services, right? So if you got foreign currency need or investment decision to make, right, EXIM Bank International Merchant Banking Service offer both foreign currency financing as well as advisory services. So your international transactions are smart, smooth and informed. And if you need to import from third country, EXIM Bank import loan have got you covered, making global procurement easy and faster. So friends, then we have the overseas investment finance. So if you are looking to invest abroad, then we have overseas investment finance that enable equity finance for Indian company entering the joint venture overseas. So those Indian company which are eager to enter the joint venture abroad, the overseas investment finance enable equity finance. Equity finance is also enabled by it, right? Whether it is exporting plant and machinery or long-term finance for capital good, EXIM Bank support help you make bold international move. So whether you are for exporting, importing, investing, innovating, EXIM Bank program are tailored to elevate India's business on the global stage. That is what we can infer from this particular slide. From EMF we have seen the consultancy and technology service, international merchant banking service, import loan, right? And we have overseas investment finance. Every aspect we have touched upon in this particular slide. Now friends, let's switch our focus to the next slide. So when Indian exporter aim high, EXIM Bank ensure they have the solid launch pad. Let's explore two powerful support program crafted especially to empower exporter, right? That is called EVDLP, that is Export Vendor Development Lending Program. And second we have PLI, Product Liability Insurance. Friends, in our crash course what we do, we provide you such kind of contents. And our main focus is that 80% of your time should go towards solving MCQs and case study, and just 20% should be devoted to learning the theory. And just this video is just for 20 to 30 minutes. The rest 1 hour you have to devote to our MCQs and quizzes which I have added in today's folder. So if you want to get such kind of material where you only go through those things from where question are asked, you can enroll in our crash course program, the detail regarding which is available in the description section. Go to the description section of the video and you will get the link for the crash course. This will help you to cover only those content that matter from examiner perspective. No need to devote endless hour just searching through every notes. No, everything you don't have to study. You have to study smartly, and this smart study is what we do in our BFM crash course. Now friends, come back to EVDLP. What is EVDLP? This program is designed to strengthen the backward linkage. Right, this program that is called Export Vendor Development Lending Program is designed to strengthen the backward linkage. That means it connects manufacturer and export houses with a strong vendor base. You can see it connect manufacturer and and export houses with a strong vendor base. How it works, let's see. It support manufacturer, exporter and trading export house. Funds are provided for some key activities. What are the key activity? Like acquisition, buying production machinery, purchasing tools, molds, jigs, dies and ancillary equipment, providing working capital to vendor, and even some soft cost like training and technical supports. So all of these are included for these funds are provided under the EVDLP, that is called Export Vendor Development Lending Program. Again I am repeating, to strengthen the backward linkage. That means it connect manufacturer and export house with a strong vendor base, because the name itself suggests vendor, right? So what you do, on one side you have manufacturer, on one side you have export house. It connect the same to the strong vendor base. That is what it do. So it support manufacturer, exporter and trading export house. Funds are provided for activities like acquisition of buying production machinery, purchasing tools, molds, jigs, dies and ancillary equipment, providing working capital to vendor, and even some soft cost. What is the goal? The goal is simple: to help exporter grow through outsourcing by boosting their vendor ecosystem. It is targeted, focused and completely exporter specific. Right, that is why it helps exporter grow through outsourcing. They grow through outsourcing. How? By boosting their vendor ecosystem. So that sorry friends, So what is the goal? The goal is to help country through its outsourcing by boosting their vendor ecosystem. It is targeted, focused, and completely exporter specific. Then the segment 2 we have is called PLI, that is called product liability insurance. So it is basically what happen, selling in developed country come with a risk. Product liability claim can be the real threat, right? That is what we call product liability insurance. So basically you are selling in international country, selling in developed country, it comes with a risk that product liability claim can be a real threat. So here is the challenge: PLI premiums are very high, right, and that discourages many Indian exporter. So EXIM Bank steps in by sharing the initial premium cost. So EXIM Bank share the initial premium cost, that make it easier for registered Indian exporter to enter the OECD country, right? To enter the OECD country, it become easier for Indian exporter with confidence and peace of mind. So from building robust vendor chain to reducing global risk, EXIM Bank support is practical, timely, and tailored for success, right? So this is one of the most important program from where questions are most frequently asked. Our entire discussion is on examination based, nothing extra we are talking about. Now let's take a quick yet powerful look into how the Reserve Bank of India monitor the heartbeat of the foreign exchange through its key forex operation reports and statement. Each one plays a critical role in maintaining India's financial rhythm. The first one we have is called FETRS, that is called a bank-wide return, capturing every detail of forex operation across the banking system. It captures the every detail of forex operation across the banking system. It is RBI eyes on foreign currency movement. Then we have the BAL statement, that is account watchdog. So balance, you can think of it like a balance checker for Nostro and Vostro account, the lifeline of the cross-border banking. Then we have Stat 5. Stat 5, it is basically tracking the foreign deposit. So it collects the data on FC and RB deposit, right? As FC and RB, foreign currency non-resident based deposit. So these are the term deposit in foreign currency by NRI. Then we have Stat 8. Stat 8 basically tracking balance to in NRE and NRO account, showing how much NRI are parking in India. Then we have NRD CSR, which is called NRI deposit snapshot. Basically it offers a consolidated view of all the non-resident deposit, a true NRI deposit dashboard. Then we have IBS, that is global positioning report. IBS stands for international banking statistics, capturing quarterly data on global asset and liability. Then we have liberalized remittance scheme. So under the LRS, resident individual can send up to $250,000 abroad each year, but there is a catch. The catch is that it is only for individual, not firms and not trust. And yes, bank must submit monthly statement, monthly remittance data to the RBI. This is what bank must do, that is called LRS, right? Lastly, then we have the statement of trade credit. What does it mean? So it gather monthly information on buyer and supplier credit. It is essential for trade tracking, right? Settlement of trade credit means it give monthly information on buyer and supplier credit, and it is very much essential for trade tracking. So you can see, just let me just zoom out little bit, and everything is in a single slide. FETRS, BAL statement, Stat 5, Stat 8, and the NSD CSR, IBS, every aspect have been taken care of in just single slide. That is the beauty of this crash course. Now friends, from deposit to remittance, from credit to balances, these 8 tools help RBI regulate, monitor, and stabilize the India's forex ecosystem. Now friends, let's look at the next slide. The next slide we have is the role of authorized dealer in ODI, right? So friends, let's uncover how the RBI plays a role in maintaining India's foreign exchange stability. So here we have, so basically what we are talking about is ODI. Yes, here you can see. So friends, when Indian company invest abroad, there is one key facilitator that make it all possible. Whenever Indian company invest abroad, there is one key facilitator that make it all possible, the authorized dealer, that is called AD, right? But what exactly do this AD bank do in the ODI process? Let's decode the powerful role in crisp and colorful way. So when multiple Indian companies come together for a foreign investment, the AD ensure that all joint signature are in place before moving forward. It's like a coordinating, so you can see joint investment. So it's like coordinating a team handshake before an international deal. Then we have the second thing that called branch designation. What does it mean? See, not all branch handle ODI, overseas direct investment, full form. ADI plays a specifically designates selected branch across key center to manage overseas investment transaction. And third point point we have is the certificate requirement. You know what it means? See, for regulated sector like banking or insurance, AD ensure that investor have the necessary approval from respective regulator like SEBI, IRDAI or RBI. That is called certification requirement. Then we have ODI form submission. So in a specific situation like investment in a strategic sector or sensitive country, ADs handle the submission of form ODI with joint signature from Indian promoter. That is called ODI form submission. Then we have the record maintenance. Here you can see record maintenance. So basically ADs are responsible, authorized dealers are responsible for maintaining detailed record of every joint venture or wholly owned subsidiary, whether it is party wise data or transaction log. It's all preserved meticulously. That is called record maintenance. Then we have permissible investment. So before green lighting any remittance, the AD authorized dealer check if it is within the RBI prescribed limit. Only upon receiving form ODI in triplicate, right, and form A2, the funds are allowed to flow out. Then we have reporting to RBI. So you know what it means? See, once the investment is made, AD authorized dealer must submit form ODI part 1 and part 2 within the RBI prescribed limit to the RBI in duplicate. So once the investment is made, AD must submit these two forms, ODI part 1 and part 2 to the RBI in duplicate. Compliance is not optional here. It is a part of RBI global investment tracking. Then we have reporting to RBI mandatory disclosure, as you can see. So I told you na that form ODI part 1 and 2. Then we have partnership firm remittance. What does it mean? So when a partnership firm make the investment, right, AD ensure that the remittance carry the proper subscription, that is the firm name and the purpose tagged correctly, right? So that is what I'm telling you. When a partnership firm makes the investment, AD ensure that remittance carry the proper subscription. Then we have loan or guarantee to joint venture and WOS. So AD also facilitate the loan and guarantee to the overseas venture. So basically ADs, that is authorized dealer, also facilitate loan and guarantee to the overseas venture. From loan remittance to guarantee issuance, they handle it all with the RBI guideline. So the next time you hear about an Indian company investing abroad, remember, behind that big move there is a trusted authorized dealer silently orchestrating every step. From compliance to documentation to remittance, right? The AD make the global dream of Indian business come true. You can see their role: record maintenance, permissible investment, right? Then reporting to RBI, partnership firm remittance, ODI form submission, certification requirement, branch designation. So these are the roles of authorized dealer. Now form ODI process flow, very very important. See, foreign exchange is not just for globe trotters and MNCs. Under FEMA, even resident in India can hold foreign currency account. But how and which type suits whom? Let's explore the fascinating world of foreign currency account. Make simple and crystal clear. Now friends, basically the first thing we have is EFC account. That is called exchange under foreign currency account. So who can open this EFC? Please understand, this is resident individual, right? Companies or firms who earn in foreign exchange, they can open. That is called exchange under foreign currency account, right? So companies, they can open it, right? Then resident individual, they can open it, or firm who earn in foreign currency exchange, they can open it. What is the purpose of this EFC account? To retain 100% of their foreign earning in foreign currency without conversion, right? Without conversion, they want to earn, right? They want to retain 100% of their foreign earning in foreign currency. And what is the nature of this EFC? It is non-interest bearing current account. Non-interest bearing current account. Every aspect, important aspect. What about the withdrawal? Withdrawal free allowed in Indian rupees, no restriction at all. So who can open? Resident individual can open, right? Companies can open, firms can open, right? Purpose is to retain 100% of their foreign earning in foreign currency. Then the second we have is called RFC account. That is called resident foreign currency account. So basically it is for returning NRI. So who can open? Only returning NRI can open. Purpose is to retain foreign currency asset even after returning to India. Source of fund: foreign asset held abroad, overseas employer benefit, or even gift or inheritance from non-resident. Then we have the RFCD account, that is called resident foreign currency deposit account. So this is another option for returning NRI to park their foreign exchange domestically while keeping the currency intact. And then we have the DDA account, right? So basically, and one more account, I think, yes, here you can see foreign currency account under RFCD account we have just talked about, right? What is DDA? DDA is the gem, right? DDA is a gem. Why it is called gem? And one more thing I want to tell you, that regarding this RFCD account, right? Who can open? Resident in India. You can see resident in India can open. What are the sources of foreign exchange? It can be foreign exchange received from personal visit abroad, honorarium for gift for non-resident for service rendered in India, unspent foreign exchange from travel, right? So nature, non-interest bearing current account, and permission, both current and capital account transaction under FEMA is allowed under this RFCD account, domestic account. And rupees, it is denominated in rupees. What about the DDA? DDA is called, diamond dollar account, right? Who can open? Diamond exporter with at least 2 years of track record. Remember it, 2 year track record is required, and purpose is to park export proceed in foreign currency and remit fund for raw diamond import. Advantage is that no exchange rate risk for import payment. If multiple account, yes, large exporter can maintain multiple DDA within RBI limit. So from exporter to NRI, from corporate earner to diamond trader, FEMA offer a foreign currency account for everyone needs. So we have just covered these 4 account: EEFC, RFC, RFCD account and DDA account. And one more topic is this one. So first of all, form ODI was introduced. There are 2 parts I told you, part 1 and part 2 and part 3. So part 1 is application and remittance reporting. There are 5 sections of it, A, B, C, D, E. What is the first section? So in section number A, Indian party or resident individual detail. In section number B, joint venture wholly owned subsidiary detail, right? And it is in section number C, transactions, remittance, financial commitment. Section number D, declaration by IP or RI. Section number E, auditor certification or self certification. Then we have UIN, unique identification number. Then we have part 2, which is all about annual performance report, and part 3, which is about the report on the disinvestment. So that is all you need to remember from this particular chapter, nothing extra, right? If you cover this much, more than sufficient. Friends, hopefully you enjoy the session. Important points is clear to you now. If you want such kind of lesson, right, you can join, you can see our crash course detail we provide in the description section. Also, you can subscribe to our YouTube channel for receiving such kind of videos. Thank you.